What's up, you guys? It is Keith here. Today is November 13th, 2021, and in this video we'll be going over the price action of Bitcoin, both the large time frame and the small time frame. We'll go over the Bitcoin dominance chart, looking kind of not so awesome for a alt season, creating a higher low. We'll talk about that more in that section of the video. We'll also quickly breeze through the total 3, which is the chart of the entire cryptocurrency market cap, excluding the market capitalization of both Bitcoin and Ethereum. So just basically looking at the smaller market cap altcoins. We'll also jump into the S&P 500, and we'll end off the video looking at both the bond values, looking at the iShares 20-year Treasury bond ETF, and we'll be able to understand the negative correlation between the bond values and the yields. And the last chart we'll take a look at is the yields. So they're looking a little bit better for risk-on assets, but we'll dive into that a little bit later on in the video. So we first want to be taking a look at a large time frame here. So this is the daily price action of Bitcoin. We also have the volume that we created here at Performante within our community. Shout out to everyone who was involved in that. Basically, adding up all the major exchange volumes and then dividing them by all the exchanges that we incorporated in this indicator in order to get the average volume of not just one exchange, but all the major exchanges that TradingView offers in terms of the volume data. So if you don't have that, definitely check that out. It is within our TradingView profile. We also threw in the Bitcoin commitment of traders, the COT data there as well. We just wiped everything except for the 4 largest sellers and the 4 largest buyers within the CME, the Chicago Mercantile Exchange. Players, basically the 4 largest players for bulls and 4 largest players for the bears. We also have the Bitcoin hash rate here as well. It looks a little bit better because if you zoom out, it does look like it's progressing to the upside, continuing the overall increase in the hash rate, securing the network, with more miners coming online after the Chinese exodus that occurred in the summer of 2021. But we'll take a look at the price action first and then dive into the other data. Not really going to get too much into the hash rate, but it does look like it's climbing back from the lows that it had in July of 2021. So let's just kind of talk about the price action here. Let's just quickly move that down. So overall, we are still forming obviously higher highs and higher lows. We had a pretty big smackdown from the slightly higher high that we had, which isn't absolutely phenomenal when you are making slightly higher highs and higher lows, because you had a high here and then you had a slightly higher high and a slightly higher high. Not absolutely phenomenal, but overall we are seeing the structure on a smaller time frame hold, which is great. If you're looking at it from a smaller time frame, you do see a head and shoulders here, as well as a descending wedge here, as well as a descending wedge here. So we are still holding that structural bullishness that we are basically carrying all throughout its hold of 30K back in July of 2021, which is good. But we do have to keep in mind that we are forming slightly higher highs, which isn't absolutely phenomenal. And that said, if it does break the overall ascension, so let's just quickly explain what I'm talking about here, because right now we have a slightly angled, basically, channel, ascending channel, but if we start to see an ascension of the ascendingness, so if we start to see basically a parabolic increase in the higher highs and the higher lows, that would be an absolutely phenomenal situation where we're going to get basically a flip of a switch, where massive alt season rally, basically capital flooding into the crypto market. And that is really what we're anticipating here for the end of the Q4 rally. But that is going to be basically predicated on the ascension increasing from what we're currently seeing right now within the higher highs, because we can, if we go on like a, for example, a weekly time frame, we can see that it held, rejected, and then we see lots of rejection around that 50K level, and we see lots of rejection here as well. So there is strong levels of resistance within this ascending zone, this ascending support zone. You probably could connect at a lower point, like probably within this one right here, if we really wanted to. But at this point, I'm just kind of making it very simple because we will dig into it more within a smaller time frame. But this chart, this particular chart, I just like to keep it on the daily, the weekly, kind of the large time frames. The major zone I'd ideally like to see hold is the 60K, because if we do look on the weekly, you see massive levels of rejection from basically March all the way until May, around early March until early May, we haven't really been able to close on the weekly above the 60K zone. It's been not only a major zone technically, but also with that round number, it's a major psychological zone. And then we not only held for 1 week, 2 week, 3 week, but we've also broken, and it does look like we still have 17 hours left on the weekly, but we are going to finally break and hold above this current level of resistance that we're seeing right now. So on a very large time frame, it does look pretty solid. I don't absolutely love to see big wicks to the upside, but you do see a nice, very strong wick to the downside that came right back up and actually closed above the open, which is very nice to see. And we have been closing higher than when we opened for the last 2 weeks, which is great to see. And it does look like we're going to end off this week as well, closing higher than the week open. So definitely good to see on that front. And then also just the fact that we're really seeing a nice bottoming on a smaller time frame gives me that indication that we could be basically increasing the ascension of the price action of Bitcoin. So if like for example, Plan B is going to be hitting his targets, 135 by the end of this year. By November end, he is anticipating, I think, Bitcoin hitting 90 or 93 or 95K, somewhere around there. So, you know, if the plan is going to come to fruition for Plan B, as well as a lot of people expecting Q4 to be very bullish, as well as us, we are expecting it to continue to the upside and increase that ascension like we've been talking about within this video. So as of right now, it does look very strong from a long time frame, weekly, daily perspective, and we'll get a better view on a smaller time frame like the 4 hour, 2 hour, 1 hour on a different chart. But before we get into it, we'll just quickly talk about a couple of the tools that we have on here. One's going to be the Bitcoin COT data. It comes out every week, so it's not something that you can really trade on too often, but we are seeing the flippening basically come back, because we've never really seen, up until the data started really, a flippening of the sellers having lower amount than the buyers. So that is really indicating to me that there is a mass accumulation event occurring within the institutional buyers who are at least using the Chicago Mercantile Exchange, which if you're an institutional player buying at these highs, you're anticipating it to move to the upside. And we did see a pretty high correlation on the move up between the sellers and buyers. Great to see that the buyers are increasing, stepping up and buying more BTC at these levels, but obviously you're seeing the sellers move that exact same direction. So it'd be interesting to see when this upcoming week's data comes out for the commitment of traders on Bitcoin. But as of now, from a technical standpoint, it does look solid. We'll go over it on a smaller time frame. Being able to see the volume on a small time is nice as well, being able to see the volume, but that's going to be my larger time frame. If we do break the 60K zone, that's going to be a pretty big worry. I do not think it will, but like I said, we are bull biased because we are still in the bull cycle. And if we do start to break this level of ascension, it's going to be, in my view, a massive rally, because a lot of people are anticipating it. We just haven't seen the momentum kick in yet. We've seen a little bit of hesitation. Maybe it could just be a final thrash before we start to see that parabolic push move to the upside. That is my anticipated future that is going to play out, but we don't exactly know. Nothing is a guarantee in life. At this point, we're just trying to take a look at the smaller term price action, the shorter term price action, looking at the candles and trying to assess how the market is using not just the cryptocurrency tools that we have, but also looking at the broader market, which we will take a look at a little bit later on in the video here. So moving on to a smaller time frame, let's just jump to the 4 hour here. So we are making higher highs and higher lows, which is fantastic. Previous major zone of resistance at around that 33.5K zone, or 0.5-ish K zone. We see from around October 22nd, we see lots of sell pressure coming in. 1, 2, 3 major rejections, and then we saw a blast through. This is also that head and shoulders that I was talking about, with the right shoulder right here. Left shoulder right here, right shoulder right here, as well as the head. And you do see a higher low forming. Although it's not beautiful, absolutely perfect, it'd be nice if it was a little bit less aggressive of descending wedge and a little bit higher up in terms of the low, but we still are forming higher lows, which is great to see. And then we saw that very strong follow through for this descending wedge, and now we're resting on the previous major level of resistance as a new level of support. Recently broke out of its descending wedge, and we're getting nice, strong, impulsive pushes to the upside. Before this massive slap in the face there, it did look very strong in terms of the buy pressure coming into the market. Like we saw increasing buy pressure, decreasing sell pressure. That's a setup for a beautiful, strong push to the upside. At this point, we're not really seeing a whole lot of buy pressure coming in. Like you could argue that you do see more buy pressure when we were able to hold the 63K zone, and then if we do get one strong push, then I could definitely argue that there's more buy pressure coming in, and then you see the sell pressure squeezing down. If we see a couple of no supply candles really close to the 65.5K zone, that would be looking phenomenal in terms of the volume and from a technical standpoint. But overall, at this point, I'm going to remain a little bit patient. We'll take a look at the broader market perspective and how that's shaping up to provide a little bit more of a cushion for Bitcoin to move to the upside. It's not so harsh. Like, for example, if the bond market looks like it's not in favor of risk-on assets, it's going to be hard to have Bitcoin and other risk-on assets in the crypto market do well, in my personal view. It's all kind of starting to correlate more and more together. So, in that said, I do think that that 63.5K zone is going to be a major zone to keep an eye on. And we'll now take a trip to the 2 hour, and then on the 1 hour is where we're going to end off here. So it does look like we are forming a smaller head and shoulders formation. Hopefully you do recall the larger formation that we were looking at on the 4 hour, and we are zooming in, and let's just quickly draw this in. We see a nice left shoulder, and then the neckline, the breakout point is going to be at that 65K zone. We see the head, which is lower than the left shoulder, lower than the right shoulder. That's going to be right here. Now, my speculation is we could see a potential little slight dip to around that 63.5-ish K zone where that previous left shoulder was. So I'm going to leave that right there, and then we could see that final blast off, because this is a little bit too ascending. I think we'll, if I can quickly just get my brush here, I think we'll get a little bit of a dive. We could create a right shoulder, and then we could then start to look like a head and shoulders, because you got the left shoulder, you got the head, and then you got the right shoulder, and that's your breakout, which is going to be around that 65.5-ish K zone. And then from there, I think we will start to see another leg higher. So on the smaller time frame, it does look like it's setting up fairly well. I think we got a little bit of time here before we are going to be breaking the 55.5-ish K zone. But as of right now, we are forming a nice bottom. We've already broken out of the well-structured descending wedge. And at this point, we are anticipating a slight dip down, going to be holding at the previous left shoulder, which does obviously validate as previous levels of resistance that we already talked about. So it does look like it's setting up pretty well, as long as we're able to hold the series of higher lows. So this low, this higher low, and we're not going to be breaking the structure, breaking this low right here. The outlook for the future is going to remain exactly the same. So we're going to be looking at the technicals to guide us basically throughout our entire journey to the upside. So if things look a little bit not so great, things are looking south, we'll have to change our perspective, change our bias. But as of right now, we are just following what the price action is giving us, basically, in short. So that's going to be my view of Bitcoin. Let's now go on to the Bitcoin dominance chart here. Moving on to something that is not tradable, but is a really good use of sentiment in terms of the level of risk people are willing to take, in my personal view, because usually when you do see consolidations or points of fear and uncertainty within the market, people usually flood out of altcoins and go back into the more liquid, the longest standing, largest market cap crypto by far, which is Bitcoin, obviously. So as of right now, it's not looking absolutely phenomenal, because although we did see a very strong push from the high that we did call on October 20th there, like from around October 20th to November 5th, so pretty strong push to the downside for altcoins, we are seeing that pullback to a key level of significance, which was a previous level, both of support and resistance, which is now just acting as a new level of resistance for the Bitcoin dominance chart. So the overall trend is to the downside, which is great, but we do have to keep in mind that we are holding a higher low right here. So if we go onto a 4-hour chart, not phenomenal that we are slowly kind of moving to the upside here. Now, ideally, it would be great to see something maybe like this, where you see a key level of resistance, hold the price, and then you're able to get something like this, and then you see the continuation push to the downside. You could even see like an ascending zone like that. I would definitely not mind that, because that's going to be a great overall structure, so then it can wind up to form that next leg to the downside. So I am not unhopeful for the alt season just yet. I think there is definitely still a very, very high probability that we will see it, because we'll definitely talk about the broader market and how it's setting up for a risk on push to the upside. But in terms of the Bitcoin dominance chart, it's hesitating a little bit. We're seeing a little bit more fear in the market, a little bit less speculation, which does make sense because altcoins have been consolidating for most of them. Some are doing really well, but the majority, especially like the top 10, are for the most part underperforming compared to what many people were expecting. So that's just putting it very bluntly. But overall, we are looking pretty solid. I'd like to see this structure hold, and then we'll see a continuational push to the downside is my view of the Bitcoin dominance chart here. So wouldn't mind it too much if we saw slightly higher highs and higher lows, very similar to this ascending wedge. So that's going to be my ideal outlook, and then we'll get a contraction in volatility, and once we get that expansion in volatility again, we'll see the Bitcoin dominance chart push to the downside, indicating altcoins rallying at a faster rate and appreciating at a faster rate than Bitcoin. Doesn't mean I'm bearish on Bitcoin, just means that I think altcoins are a really good position to be in, especially if you have let's say a good amount of money in Bitcoin in terms of exposure. If you're already understanding why crypto is important, you're just going to be able to get more bang for your buck in altcoins, although in a bear market, you're going to lose a lot of money compared to if you just hold Bitcoin, relative to holding some of these alts that are a lot more speculative. So there's a time and place, and I think we are basically at time and place. So moving on to the total 3. Let's zoom that out a little bit. So this is the market cap of the entire cryptocurrency market, excluding Bitcoin and Ethereum. So it kind of gives you a good understanding of what's happening in the altcoin market. You're gonna get a little bit of water here, and then jumping right into it. We haven't really seen too much of an impulsive push or an injection of capital into the broader markets. Like even things that have been previously absolutely pumping, like Solana, is kind of stagnating. AVAX is doing a little bit better. The layer 1 platforms, but overall it is kind of stagnating right now. I think a lot of people are waiting for Bitcoin to validate that the second half of the bull run is here, and we're going to see that final follow through that many people are anticipating for the end of 2021. So I think once the momentum in Bitcoin comes back, especially when we're able to potentially increase the ascension of the price action, forming higher highs and higher lows, but increasingly higher highs and increasingly higher lows. That's the point where the true, basically parabolic push is going to be occurring for a lot of different altcoins. Because there's a lot of people who think that there is going to be a massive push to the upside. It's just a matter of when. And I think once the market finally validates that a lot of people are correct, then the money will start to pour in. So if you're positioned well now, you don't really have to FOMO in or anything at the later half of it, because that's when the smart money that have been investing kind of throughout this time are able to basically pull some really solid profits out of the market there. So hopefully that's a good perspective of what I view the market doing right now. From a technical standpoint, in terms of the altcoin markets, we are forming a nice ascending triangle that did break to the upside, forming a higher lows that was squeezing the price, contracting it towards the apex of the structure at basically like the $1 trillion mark, which is kind of a interesting zone to absolutely perfectly squeeze into, because it's such a round whole number, just getting into the trillion. So I don't think it's an absolute coincidence, but it's kind of cool how that was able to form like basically right at the $1 trillion mark. Pretty crazy to see that it's, I can't say only, but the fact that every single altcoin added up, excluding Ethereum, is only $1 trillion. I just feel like it should be more, considering a single company could be worth trillions, which is pretty crazy. But anyway, we'll move on to the next series of charts here. We're now going to look at the more broader market, looking at things like bonds, looking at things like the S&P 500. So let's just move that over. We'll quickly talk about the S&P 500, and then we're going to jump into the U.S. bond prices, as well as the U.S. bond yields. So for the S&P, we did have a push to the downside, with Elon selling like $5 billion worth of Tesla shares. And although the market is recovering, there's definitely quite a bit of resistance at that $4,700 range. Not only from the previous resistance that we just hit, but also the fact that that is a major target for the 61.8 level extension. And the final target is going to be basically 900, really close to it. At that point, I have been listening to, like, for example, just looking at the most successful people in the world in terms of starting corporations, people like Jeff Bezos and Elon Musk. They are selling at this point, and those are very smart individuals. I don't think this bull run is going to last forever. I think there's going to be a final parabolic push to the upside, and at this point, most risk-on assets are going to be pretty well correlated, not perfectly, but things like the S&P, the NASDAQ, even like the Russell 2000, although that's not perfectly well correlated, they're going to move in the similar directions with the same as things like Bitcoin, Ethereum, Solana, Cardano, Binance Coin, PancakeSwap. All of these, in my view, are risk-on assets, which are going to be somewhat positively correlated, and things like the let's say, for example, U.S. bond values or the U.S. dollar, the DXY, those are going to be negatively correlated with risk-on assets. So we're going to ideally see a shift, a point where risk-off assets are going to be doing really well. U.S. dollar, Japanese yen relative to more risk-on currencies, for example, like the Aussie, the New Zealand dollar, Canadian dollar. We'll just see a massive shift in sentiment. But up until that point, I think it's going to be very risk-on. And we haven't really seen a tumble yet. I think the technicals are really going to be something to keep an eye on. But from a broader market perspective, we're really seeing let's just move this to the SPX 500 USD because this gives us a little bit more data to work with. And on the 4 hour, we have held this expansion. We call it a megaphone, but expansion and volatility. You can see that right here. Not absolutely perfect in terms of the support, but you do see a nice level of resistance right here. Has not broken out. And then you see it was able to respect the previous level of, it was first a resistance, new level of support, and then we can see it did finally break out right there, and we see another level of significance that, in my opinion, is not completely broken out yet, but as of right now, we are forming a slight nice bottom. We have formed a higher low from this low, as well as broken into a new high from these highs here, and this is a major zone of significance, so we can just remove that. Key level of resistance, support, resistance, pushed back down, formed a nice little bull flag, forming a series of slightly lower lows and lower highs. We had a nice capitulation event, which had a big wick to the downside, which is indicating capitulation event. And if we just quickly add the volume here, I'm sure we could see, wow, surprising, not much volume, right? That's kind of surprising, to be completely honest, but you're seeing a lot of movement for not much volume, which is kind of a capitulation final indicator, basically, and you see a decreasing amount of sell pressure coming into the market. Really great to see in terms of the risk on asset here. We could just quickly put a midpoint down that zone, like so. And then on a larger time frame, we still have not hit the final target. Like, let's say if we go to the weekly, and we talk about this major structure that we've been eyeing up for a very long time, that we've been talking about literally for years, which is this guy right here. This still has not broken out in terms of the final target hit. So let's just quickly get the final target, and then we'll go on to the next chart. But we still have not hit the final target of this yet, so I am anticipating that to be a potential final zone, which is going to be around that $4,900 zone, which we just already discussed. So I think there's going to be that final push to the upside for the S&P, which doesn't look like much in terms of movement, but for the S&P, a movement of like 5, 10, 7%, we could overperform a little bit, is still pretty significant. So let's move to the 4 hour and talk about smaller time frame now. So at this point right now, I'd ideally like to see this zone hold as a new level of support, which we were first touched as a resistance. Now we've broken above it. If we move on to the 1 hour, we haven't really closed above this zone. So what we're looking for at this point is to see the 46.85 zone hold above and then retest and validate for a new level of support. That's going to give me a lot more confidence that we're going to continue to see a push to the upside. We could draw a nice little squeeze there and then look for potential targets. But at this point, it is pretty heavily dependent on if this is going to hold. If it does break, we could even see like a lower low from this low right here touch. Basically, I think crypto is not going to be doing well for a little bit if this does not hold, because a lot of risk-on assets are moving in correlation and in high positive correlation at this point. Very dependent on stimulus from the U.S. government, it really seems like. So that's going to be my view on the S&P. Don't want to get too much more into detail on that one. Basically, what we're really looking for is this major level of support at 46.85 to hold. Once we start to see a higher low hold at that point, it's going to be looking really phenomenal for Bitcoin. So now we're going to end off looking at the both the bond for the U.S. Treasury note as well as the yield for the 20-year Treasury note for the U.S. government there. First things first, let's first look at the value, because the value and the bond and the yield of the bond are negatively correlated, meaning if the value of the bond, which is this, is going down, you'll see the yield move to the upside. We want to see, ideally in a inflation trade, and if you're in crypto, you'll really want to be seeing this. Ideally, you want to see the value of the bond move to the downside and the yield move to the upside, which, if you just is understanding a basic supply and demand, it makes a lot of sense, because if you are purchasing a bond and you are getting really not much in the future for it, the actual value of that asset is going to go down. And if you are lending money out and expecting that they're going to inflate more of it, currency proliferation reduces the value of the currency. You're expecting a higher return because you know that there's going to be inflationary tax, basically, that is going to reduce your overall profit. So investors are demanding more interest because it is well known that they are printing more than, let's say, before, than any other time in history. I think 25% of all the currency was printed in 1 year, or 20 to 25. It's some crazy percentage, but obviously, hopefully, if you do listen to our podcast or watch our market updates, you are well aware that we've been talking about inflation for a long time. They can't do it forever. They are really stuck in terms of the Federal Reserve. They are very stuck between a rock and a hard place, because if they want to basically curb inflation, they only have one trick up their sleeve, and that is raising interest rates. That's all they can do, really. So if they raise interest rates, like we saw in the late 70s, early 80s, they basically make it impossible for businesses that currently are surviving just off of cheap interest to still survive in the future, because they need to pay their debts. They don't have enough revenue because they're not making revenue, because they're just borrowing money for so cheap. There's a lot of companies like that, zombie companies. Definitely check those out. It is a growing issue in not just America, but really the world, because of all this cheap money and low interest that companies have to pay for debt. But if interest rates go up, a lot of companies will not be able to survive. That's not bullish for risk-on assets. That's not bullish for speculative businesses, like all these EV companies that you're seeing pop up that have like very low sales or no sales, and they're valued at over, $1 billion plus. So it's pretty crazy to see. But all that is possible due to low interest rates. But if you see interest rates rise, then it's going to be terrible for the stock market. Crypto's not going to be doing well, in my personal opinion. So as long as the Federal Reserve is going to keep interest rates low and lying through their teeth that inflation is transitory, then I'm extremely bullish on risk-on assets. Things like crypto, I think, will be doing very phenomenal. Stock markets, NASDAQ will be doing phenomenal. But once that switch hits and the Fed and the basically central governments around the world, I think, will kind of work in unison in terms of raising interest rates. Once they have to, when it's not an option, because inflation is just too aggressive, and it's just making the price of everyday goods and services substantially more expensive every single month, every single week. At that point, then they will have to raise interest rates. They will have no other option to, or else you'll get hyperinflation. Look at Venezuela, look at Zimbabwe. It is inevitable. So in my personal view, that is when the shift will occur. You'll see it in the technicals, but you do have to keep a really close eye on central banks, because those are going to be the key players that are going to be making really the decision to destroy the economy or not. So in that said, we'll finally take a look at the value of the bond here. We did form what I thought to be a very nice reversal structure. You got a nice bottoming, or I guess a topping in terms of the top there at around 152, making higher lows. You got a very aggressive push to the downside. We were holding the 146 range really well, but we had a strong push to the upside. The major zone that I was looking at for a supply area is around 149, 150. We were able to see that hold. If we take a look at the weekly chart, it's a candle and a wick just to the upside, which is really nice to see. And we are seeing the majority of the days on a smaller time frame close below that 149.50, 149.60 range, which is what we're looking for. So hopefully, let's just quickly draw this in. Hopefully this is an ascending triangle like so. We've got a break to the downside. This is the final setup before we start to break to the downside for the US bond values. So that's the hopeful structure that we're going to be seeing. What we would not like to see is if we hold the 145-ish zone right there, because what do we see? This is a neckline. This is the left shoulder. Let's just take all that off, and then we can see, although head and shoulders isn't ideal for continuation, you do see somewhat of a structure like that. And then what you'll probably see as well is you'll probably see higher lows, and then you could potentially draw either an ascending zone that's going to try again to break, or maybe you might be able to see like an ascending zone there. So then what you'll be anticipating is, let's say, somewhat of a squeeze like so. So you're getting a slight squeeze of an ascending zone. That would be a potential possibility, but I do think that this zone is going to hold as a key level of resistance, and we're going to be starting to see that continuation of push to the downside for the value of the bonds, because really central banks don't have another option other than to destroy the currency native to their country. They do not have another choice. That is option number 1 to option number 99 on the list of 99 options. All right. The next thing and the final chart that we'll be taking a look at is the bond yields for the US 20-year government bond here. So very similar structure, but completely flipped for the actual value of the bonds, because when we were looking at the bond values, we saw a move to the upside, and then we saw like an ascending zone like so. And then you saw a big dive down, and then you came back up, and then you can see that ascending zone like that, and a horizontal level of resistance. This is basically that, but completely flipped, where you got a horizontal level of support and a descending zone of resistance. You got a initial pump to the upside, and now you're pulling back before the next leg to the upside. So in my personal view, it was really fantastic to see this candle, or this series of candles on a smaller time frame, where you get a increase in a price up, or a move up, in yield for the 20-year, and if you're looking at a smaller time frame, it's even more aggressive. But that was really nice to see for risk-on assets, and as long as this structure is able to hold, and we are inevitably able to get that next leg to the upside, things are going to be looking good for risk-on assets. Because right now, Bitcoin is looking a little bit not too ideal with the slightly higher highs. We talked about if it does get more ascending, looking absolutely phenomenal, but the point at which I will say I have to reduce my exposure to risk-on assets is if we see the S&P start to plummet. Right now it's looking pretty solid. We're getting a nice rebound from the lows that we had back in, like, let's say a few days ago. If we get if we get the S&P to start looking pretty weak, and if we get the bond market to start looking like it is more of a deflationary environment where we're not seeing the bond values drop and we're not seeing the yields of those bonds increase, if that picture isn't playing out, I basically have to tell myself that I am going to reduce exposure and risk on assets. But until that point, I think that risk-on assets are going to be doing well for basically from now until the end of this year. And the only thing, in my view, at this point, that can stop the inflation rate is the central banks of the world. So definitely keep an eye on them. Hopefully this was educational. There was a little bit of talking, but I think it's some information that I think people need to be aware of, because it's really easy to get caught up in looking at charts, looking at small-term price action, the 1-hour chart, 4-hour chart, but it's a good thing, in my view, to look at the larger picture at play. Major decisions that the Fed is announcing is something to keep an eye on. If you don't have a place to keep an eye on it, we do present every single FOMC meeting in just a quick summary, TLDR, of what happened, what they talk about, and basically what the outlook is from their perspective in our Discords. If you're not in there, definitely check that out. And thank you for tuning in. If you thought this was educational, informative, entertaining, it would mean a lot if you do give it a thumbs up and subscribe so we know to continue making more videos like this. Thank you for tuning in, and until next time, have a good one, traders.